Hello and welcome to Startup Street. I'm Shruti Mishra and with me as always, Arundhati Ramanan. These are the top headlines from the startup space. Ather Energy's initial public offering was subscribed 28% on the second day of the public bidding. The retail segment was fully subscribed on day 2, while non-institutional category was subscribed 26%.
D2C fashion startup The Sold acquires apparel brand Red Wolf. This acquisition will help The Sold store to utilize Red Wolf's expertise in creative and pop culture-inspired clothing.
College Deco secures a structured debt funding of 40 crore rupees from Debt Marketplace Wrecker Club. The proceeds will be allocated towards driving growth, enhancing technological advancements and ensuring operations as the company prepares for the upcoming admission season.
Market regulator SEBI is looking at whether investors were shortchanged due to alleged wrongful disclosures by Ola Electric. Ola announces sales of 25,000 units in February, but the government portal showed only 8,600 registrations. Ola called it a straightforward case of temporary registration backlog.
Collective Artist Network announced the launch of Collective Media Network, also appoints Sudeep Lahiri as the head of channels and distribution. Sudeep will help them scale both creator and business-facing content.
Paytm's gaming arm, First Games Technology, gets show cause notice worth 5,712 crore rupees over tax dispute. Paytm calls this an industry-wide issue as GST authorities compute the liability based on 28% slab as against 18% calculated by the gaming companies. Those were the top headlines that we're tracking for you from the startup space. Market regulator SEBI is looking at whether investors were shortchanged due to alleged wrongful disclosures by Ola Electric. Ola announced sales of 25,000 units in February, but the government portal showed only 8,600 registrations. Yash Jain is here with more on those details. Yash?
Well, as you rightly pointed out, market regulator SEBI at this point of time, what we understand from sources, is looking at the veracity of disclosures made by Ola Electric. SEBI action has come after it received certain complaints from investors of Ola Electric with respect to an alleged wrongful disclosure made by the company on the exchanges. What is that alleged wrongful disclosure? Well, on February 28th, as you rightly pointed out, Ola had announced sales of 25,000 units for the month of February 2025 as against government's portal Vahan, which showed only 8,600 units were actually registered. Market regulator SEBI, after, as I said, certain investor complaints, took cognizance of it and right now is looking into the disclosure made by the company on the exchanges versus what really transpired in terms of actual sales. Ola, after, of course, this particular disclosure also clarified, saying that this case of the alleged discrepancy in the sale of units was a straightforward case of temporary registration backlog. Market regulator SEBI is taking, acknowledgement of the stock price also on the day when the alleged wrongful disclosure was made and on the day when the clarification was posted by the company to see whether investors of the company were shortchanged in this process of an alleged wrongful disclosure. We've written to Ola Electric on this particular query. A response from the company still remains awaited though.
Thank you, Yash, for those details. Appreciate you joining us. On what's brewing today, healthcare-fintech startup Savein has raised 37 crore rupees in its latest funding round, led by existing global investors, including 10x founders Oliver Young and Leblon Capital, with new participation from STEM AI. Now, this follows a 64 crore rupee seed round, taking the total funding for this Y Combinator-backed startup to over 100 crore rupees. To discuss the road ahead, I'm joined by Jitin Bhasin, the founder and CEO of Savein. Jitin, welcome to Startup Street. And before we dive into the fundraise, let's talk about the problem you're solving. Savein is focused on improving access to outpatient healthcare, offering no-cost EMIs for services often left out of traditional insurance. What kind of impact have you seen so far, and which categories are gaining the most traction?
No, thanks, Shruti, for having me here. I think we've started Savein to allow people to access private healthcare and pay for private healthcare using easy EMIs. It's how you probably buy a phone or a refrigerator or an AC. So we are bringing that revolution to private healthcare. We focus solely on domains, as you rightly said, which are not covered by health insurance. And these include domains like dental, hair, dermatology, cosmetic procedures, fertility procedures like IVF, fitness subscriptions, alternate therapies like Ayurveda, homeopathy. So I think in the course of last 3 years, since we've been building and growing Savein, we have seen tremendous product market fit in these specific categories. Indians are spending billions of dollars out of pocket on preventive and elective healthcare. And I think that is where Savein 0% EMIs, they come into the picture, and you could just avail the treatment of your choice in a timely manner without breaking the bank. So I think we have seen tremendous take-up rate in these categories.
Sure. So, Jitin, you're saying that you're operating in a space that bridges a clear gap in India's healthcare landscape, especially in segments like dermatology, fertility, and Ayurveda that are typically uncovered by health insurance. But let's now talk about, WellUp, your B2B wellness platform. Who are your partners, and how is it different from conventional employee wellness programs that we see? What has been the response so far?
Yeah, I think tremendous response. So WellUp is an extension of Savein, because we figured two key problems in employee healthcare and wellness programs of today. Most employee healthcare programs confine themselves to hospitalization coverage. And I think, as we know, 60% of employees today comprise of Gen Z, and even millennials seldom get hospitalized, right? I mean, data tells us that not even 5% of employees get hospitalized per year. Employees today want preventive care. They want daily health care. They want access to healthcare which enables them to achieve superior health outcomes rather than find themselves in a hospital bed. So they want to do everything to avoid being inside a hospital, whereas these programs of today were catering only to hospitalization. So I think that is the
Sure.
problem we are solving with WellUp. And WellUp therefore allows you access to daily healthcare like doctor consultations,
Okay.
mental health consultation, which is an acute problem, as you would know, Shruti. It's a menace in India. So we allow you access to
Yes.
clinical psychologists. We allow you to undergo preventive body checkups annually. So every employee can undergo body checkup and undertake
Okay.
timely action towards healthcare. So I think
Sure.
that coupled with up to 5 lakh rupees of credit limit is being provided to every user. So what it does is that, let's
Okay.
say you have to spend, let's say you have to spend 2 lakh rupees at a dentist. So your insurance will not cover it. But using this healthcare credit limit, you can walk into any of our thousands of healthcare practices, and you can avail that
Okay.
particular treatment and pay in easy EMIs without, let's say, any down payment. So WellUp, therefore, is
All
very
right.
revolutionary in nature. Yeah.
Sure. Let's talk numbers, Jitin. Since inception in 2022, you've processed over 5 lakh customer applications and reported a 250% revenue increase for FY 2025. What is the revenue outlook going forward, and what does the path to profitability look like?
Yeah, I think, yes, we have closed the last financial year at more than 2.5 times the revenue that we did in the preceding year. And for the current financial year, we want to grow 3x. We believe we can grow 3x in this financial year, which means on WellUp, we would like a minimum of 5 lakh users. And we are currently powering 500 crore annually of 0% EMIs in healthcare. I would like that number to be in excess of 1,000 crore annually by the time we end this fiscal year. So I think these are the clear directions on revenue. Now, in terms of profitability, as an organization, Shruti, we are very obsessed with unit economics. We have been unit economics profitable for more than 1 year.
Okay.
We are unit economics
Sure.
positive for more than a year. And I think at an organization level also, we expect to break even in this financial year. And that will be a unique outcome among startups, because if we grow 3x, if we become profitable, I think that's an ideal outcome that we are chasing.
Okay. All right. One final question, Jitin, before we wrap up. 37 crores in this round and over 100 crore rupees raised in total. What does this funding milestone mean for Savein at this stage of your journey? And with this new capital, what are the plans? Deeper penetration into existing markets, new offerings, or geographical expansion?
Look, I think any funding is, three things. It's trust. Our existing investors are topped up. We were not necessarily in the need of money, but we took this money opportunistically to grow WellUp. So trust, definitely. Opportunity, I think it's a very big addressable market. Healthcare is a multi-billion-dollar opportunity in a sunrise sector. So it's a big opportunity in front of us. And obviously responsibility, right? So I think these three are pivotal in our growth journey. And this funding is a testimony to our execution. In terms of our plans, I think in the upcoming, let's say 2 to 3 years, we would like a minimum of 5 million users on Velup, positioning it as an ideal complementary solution to traditional health insurance programs. And we aim to power tens of thousands of crores of 0% EMIs in healthcare, not only at point of healthcare, physical centers that we offer today, but we will soon be
Sure.
entering online 0% EMIs checkout finance as well, Shruti. So I think we are
Okay.
focused on India
Oh,
geography. And while this may be an international problem also, and it is, but for now we are focused on India geography. And once we feel that we have done justice to India, then we will think about outside of
okay.
India.
All right. And on that note, I'll have to wrap up our conversation. Chitin, many thanks for your time and wish you the very best for all your growth plans. Thank you so much.
Thank you. Thank you, Shruti.
And moving on, Bangalore-based Juspay has raised $60 million in its Series D round, led by private equity giant Kedara Capital. The round saw continued backing from existing investors SoftBank and Axel, underscoring strong investor confidence in Juspay's global vision. Known for empowering enterprise-grade payment infrastructure, Juspay is scaling its open-source orchestration platform across markets in Asia-Pacific, Latin America, Europe, and beyond. With this fresh infusion, the company plans to further enhance its AI capabilities and deliver next-gen solutions for merchants and financial institutions worldwide. Joining me now to discuss this further, Sheetal Lalwani, the co-founder of Juspay. Sheetal, thank you so much for taking time out and being here with us on Startup Street. First of all, congratulations on the fundraise. You've raised funds after 2 to 3 years. So how will the $60 million Series D funding be allocated for growth?
See, the fundraise was predominantly for a couple of reasons. One was to give some of our existing investors an exit who've been with us for a long time. It's a partial exit. But primarily, the infusion into the company was for our growth plans around international expansion and open source and bank infrastructure. That's predominantly how we are looking to invest this new capital which we have raised.
Right, so providing exits there for some of your investors. You were last valued at $460 million. So with this fundraise, what are you valued at now? Now that you'll have achieved the unicorn status, what's the next milestone?
See, these are all outcomes. Unicorn status is a outcome, was never a milestone per se for us. If you really have to answer, what are we excited about going forward? See, we want to establish being a global company, a world-class tech company, building great payments infrastructure, built out of Bangalore. I think that's what we are excited about. We are excited about can we achieve $1 billion in net revenues? When you look outside, there's a lot of companies who do good tech just like us and are clocking really good revenues. And I think that's what's exciting us, being a global company, solving for digital payments infrastructure out of Bangalore.
So you've got that $1 billion dream, but also you want to build from Bangalore for the world, right? So if you could tell us a little bit about your global expansion plans, which geographies are doing well for you? Are you eyeing newer geographies as well?
Yes. We started investing in our international expansion more than 3 years back. We now have offices in 4 countries outside of India, right? Singapore, Dublin, Sao Paulo, and in San Mateo in California, right? And we are going to deploy more funds into setting up a base in these countries, right? International expansion is going to be a primary place of new investment for us. Also, there's this big tsunami wave which has already hit us, with AI. We'll have to invest a lot in AI fundamentally, which is going to touch every role within the organization, but also it's going to also touch about how and what kind of products we're going to build for our e-commerce businesses, banks and fintechs and all of that, right? I think so. A big focus is also going to be in investing in AI for building the next set of our growth engines.
So as you just mentioned AI, right? Can you share specific use cases or areas where AI is already making an impact within your platform?
See, a lot of it is going to be firstly internal, right? Every role in any company is already affected by AI. We just have to make sure we are deriving the best out of AI, right? Can we improve our productivity 10x? Already we used talk 10x. So 10x is like 100x. Could we do that? Right? But what our merchants, what our clients are going to see is even the current products are going to be touched by AI, whether directly or indirectly, right? They may not even see AI the way you and I experience, like a chat or some interface, right? But the product itself, for example, features will get delivered much faster. Right, there is going to be extreme amount of efficiency in how they interact with the systems, interact with people, interact with the products. Right, all of that is going to be changing via AI. But also, there's going to be AI first products and features which will come out into this. Right, we are launching a couple of AI first products and features in the next couple of quarters.
So big focus there on AI. Now the funding also comes at a time when several major platforms, including Paytm, PhonePe, Razorpay, and Cashfree, have ended their orchestration partnerships with Juspay, right? So how are you sort of recalibrating your product and go-to-market strategy in light of these shifts? And what steps are being taken to strengthen enterprise trust and long-term stickiness? And how will this impact your top line?
We've always been a software provider for our merchants, right? Merchants use us, and then they get to work with any PAs of their choice. Certain PAs have taken the call not to support orchestrators. It's not like we didn't have any tie-ups with them. They basically chose to say, we will work only if there's a direct integration and not if you use a third-party route. So just clarifying that. But for the merchants who are using a Juspay orchestration, there are multiple options available. And even a lot of these PAs also gave exemptions because these are large merchants and extensions, right? So there's not really been a major disruption or anything for our existing merchants. They had multiple other options, also banks. There are other PAs who have really stepped up and started supporting them. The path forward is, merchants continue to see orchestration is important. That's what I think has been a clear message to us also, to PAs, and also from the merchants also, that orchestration is a very, very important aspect of how anyone would build their digital payments infrastructure going forward. They're working with PAs who support this kind of flexibility and also will take long-term moves like that. Furthermore, we've also open sourced, right? So merchants can now make it like their own software, right? We have merchants who are already contributing to open routers. So it's no longer just pay, right? It's not a black box or anything. It's an open source, open data. Merchants are taking it and adopting it, and they will make it their own software, and they'll work with any PA of their choice, not something which is dictated by our integrations or our relationship, right? So the way forward is there's going to be a need for openness, transparency, and merchants are going to adopt what suits best for their needs, right? So yes, impacted in the sense we had to, in the sense like we've now accelerated our open source journey for India. We hadn't planned it that way. We had built Hyperswitch and open sourced it for US and Europe almost 2.5 years back, but we've accelerated, which means we had to do some work. Of course, merchants have also had to do some work in terms of either finding alternate partners or negotiating and understanding the impact of it, or some of them have chosen to take the open source router. So that's some additional work. So impacted in that way has been that there's been some additional work which probably was going to happen down the lane has been accelerated. We've been this thing, but in terms of revenues or dip in volumes, that's not been any material impact on our platform.
So no material impact there. But, coming to your numbers, right? Your revenue from operations grew 49% to 319 crore rupees in FY24. And you managed to cut your losses by 7.8%. So if you could sort of take us through where you hope to end this year.
See, we are ending FY26. We are in the new financial year, right? We are expecting a similar kind of a growth. EBITDA we could maintain, but we actually have more aspirations to invest ahead in our international journey, in some of the open source journey. So that will define some of the EBITDA margins. Yeah, that's probably how we are looking at it in a way, right? We have the flexibility in how we invest capital, not just because we've raised capital, but also on a cash flow positive, EBITDA positive path. So we have a little bit more levers in terms, but we'll be opportunistic about it, right? We're not just going to go and invest or burn just because we have the capital or just because we are generating cash. We'll, as always in the last 10, 12 years of our journey, we've been very pragmatic. When we know there's something which we can make it work, that's when we go invest. But if we know we can really make it work big, we go big in investing there also, right? Like how we did with UPI for 4 years. There's almost no monetization, but we knew this was the right path when we started investing in it. So we'll continue that kind of a first principled approach in investing when we see those opportunities.
All right, Sheetal, thank you so much for taking time out and being here with us on Startup Street. But we're completely out of time, and we wish you all the best on this journey going forward. But with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.